following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host for the show, David Blain. We thank you for joining us today on Cable TV 10 in New Bern as well as 94.1 FM WNBU. As we record this here in New Bern, suffering from the aftermath of Hurricane Irene, we've got the studio up and running and we got power back at our office, so I think we're somewhat returning back to normal. Some people out there without power still. We hope that all our viewers and listeners made it through the storm okay. In the coming weeks, we may take a look at some financial implications of the storm, but for right now, we want to pick up on a few things that we started before we got interrupted by the hurricane. As you recall, we were having all sorts of problems with the economy and treasuries and debt and things like that. We want to pick up on that today, as well as continue with our series on preparing for death and the administration of estates and things of that nature. So before we get into the show, as always, we'll give out the number here is 252-633-0107. Our email is allthingsmoney@dlblain.com. And we get our ideas for the show from viewers and listeners just like you. So if you have any comments or questions on what we've covered or a topic you'd like to see in the future, please give us a call or email. You can also visit us on the web at www.dlblain.com. There you'll find information about myself, my firm, as well as archive copies of the shows. We usually post them there. Within a week or so of airing, we'll have archive copies. So if you miss a whole show or a segment, go to the web and you can catch up there. So let's get into the show here today. The first topic I want to talk a little bit about is a guy by the name of Bill Gross at a company called PIMCO, Pacific Investment Management Company. And Bill Gross runs the world's largest bond fund in the world, the Total Return Fund. He's got a huge operation that he runs. He's one of the most well-respected names in fixed income management. You know, he's on all the talking head shows. He's part of, council advisors of this, of that. And my point in talking about Bill, I've got a lot of respect for him and still listen to him. But the reason I'm bringing this up is, if you recall back in the late spring, summer, Bill Gross sold completely out of U.S. Treasuries from his bond fund. And he was extremely negative on U.S. Treasuries and how inflation was coming. And, you needed to get out of treasuries and they were just going to be abysmal. Well, if you've been listening to the show the past couple of weeks, what you know is that U.S. treasuries have been on a tear and the total return for treasuries has been tremendous this year. With the global instability, people have been flocking to the U.S. dollar and to U.S. treasuries. And so this was, in a word, simply a colossal mistake by Bill Gross. In fact, I have here his flagship Total Return Fund, which, by the way, is $244 billion in this one mutual fund. So far this year ranks 501st out of 589 bond funds. And so it's basically, almost at the very bottom of the fund rankings. And so my point in bringing this up is not really to beat up on Mr. Gross or PIMCO, but to just point out that it is extremely, extremely difficult to, quote, beat the market on a consistent basis, whether it be the stock market, which there's Bill Miller, also a guy by the name of Bill Miller ran a mutual fund for Legg Mason that for over 15 years in a row beat the S&P 500, and he was the subject of all these articles and newsletters and TV shows. And then he was completely in the wrong direction in 2007, 2008, 2009, and his fund lost tons and tons of money. And so if you look at his average return over the past 20 years, he's back to average. And the same thing with PIMCO and Bill Gross. So we don't want to beat up on him too much, but my point in this is if you're the individual investor out there and you're trying to make money and invest, that making big bets for or against things, sure, gold has worked out. We've been investors in gold for the past several years, but I'm telling you, at some point, gold is going to come crashing down. And if you're not sure when, it's better to keep a diversified portfolio. So Bill Gross, a lot of people tracking what he does and following what he does, and he was just flat wrong. And so we don't want people out there to become wrapped up in a guru. This guy has the answer. This guy is the one that's making all the money just because they're on CNBC or CNN. What we want you to do is maintain a diversified portfolio, certainly make adjustments according to the economy. As the economy changes or asset classes become overvalued or undervalued, but to try to make predictions, whether it be in the stock market or bond market, is a recipe for, over the long term, falling behind the averages. Anyway, that was what we wanted to talk about at Bill Gross and PIMCO. I just thought it'd be kind of fun, his closing statement in this interview. And by the way, this was from CNBC.com, this article. He says, when you're underperforming the index, you go home at night and cry in your beer, he said. It's not fun, but who said this business should be fun? We're too well paid to hang our heads and say boo-hoo. So that is a quote from someone that manages $245 billion. Okay, so now that we've got that out of the way, just remember, unless you have some sort of inside information or something that you think you know more than the Bill Gross, the Bill Millers of the world, then we advocate sticking with a diversified portfolio of stocks, bonds, commodities, real estate. Make sure that you benefit from the upswing in the markets, which, by the way, the past week, the market has rebounded significantly. So for all those people that went to cash, that think the world might be coming to an end, as we said on the show many times, we don't think the world is coming to an end. Certainly we have problems here in the U.S. In Europe, the problems are much greater, but the market's rallying definitely is an indication that the problems may not be as bad as a lot of people think, and that the economies can recover, especially the U.S. The U.S. has really been leading the world in times of uncertainty. People have been going to high-quality U.S. stocks, high-quality U.S. bonds, and being very optimistic about the U.S. future, our demographics and things like that. We think it's way too soon to count the U.S. economy out. Well, we're coming up on our first break here, so when we return after a few short messages, we'll pick up with this topic again. So for All Things Money, I'm your host, David Blain.